Hello and welcome. Good afternoon. You're watching the Policy Times Unleashing India Web Summit series, post COVID devastation, and we talk on multiple areas as COVID 19 is a benchmark dividing the history into two eras, pre COVID and post COVID. The life in post COVID is going to be certainly very different than the life that we enjoyed. Our future, the past generations enjoyed a different life. Our generation is enjoying a different life. The generations to come will see a complete different life. Today, I was talking to one of the very eminent and prominent personalities, and he was saying that we might have to live with COVID for next 10 years. If that is so, then things will be certainly different. So now, today again, to talk on that, so this special episode is actually to bring specialists, experts from different domain and understand a new roadmap or a new strategy for national reincarnation. And we call it national reincarnation because you can understand what I said. Because post COVID, the life is going to be almost like a reincarnation. The chairman of the show is Dr. P. Shekhar, who is also chairman of Global Smart Cities panel, author of around more than 80 books on different topics of national growth, nation building, and also an architect of the concept called secure governance. I also want to welcome two of our eminent experts and speakers of this afternoon, Mr. R. Kanan. Mr. R. Kanan is a well-known writer, international speaker, and head of corporate performance monitoring at Hinduja Group. Sir, welcome. I also want to welcome Mr. Karthik Radia. He is the global expert on digital technology and financial management, and also managing partner of Mazars India. Today we'll talk about the role of enhanced role of technology and financial management strategies. Without taking any more time, I want to hand over to Dr. P. Shekhar to kindly take over the session.
Thank you, Akram. Today should be the 35th session. We started it in a very casual way about 4 months back, and fortunately, it has been continuously going on 2 weeks, twice a week, all uh, almost 4 months. Now, today's topic is very, very interesting from a very different angle. This is not technology for financial, it's technology and financials for managing the affairs of the world. So they come parallelly, not one for the other. One for the other is always there. Technology has to support financial management. So we have very eminent experts. We have Mr. Uh, Karthik Radia. He is an international person of repute. I don't know which country he has not visited. His profile indicates that all the countries he has studied, he has done work, he has been a trainer, he has got trained, and it is in USA, Europe, many more places. Even individually, few states of Europe, USA, he has been there. And he has done a wonderful job in various sectors also. Various sectors of economy he has worked. And today he is managing one of the largest consulting companies in the world called Mazars. And it is having 44,000 people in 91 countries. And he is the managing partner for the Indian operation. And second, we have got Mr. Kannan. Mr. Kannan knows no, you know, introduction. He is a person for all the corporates. He is heading the corporate functions of Hinduja Group, and he is a prolific writer. He writes in all newspapers, and he is a man in demand in any conferences on CFO, CIO, you name it, and he is there. And Hinduja itself being a company of a different reputation and doing very good work. He's a person who does, but he doesn't do mainly for Hinduja. He does for everything for a corporate expansion. Now, I would like to ask Mr. Karthik to come first. But before that, I'll just run through for 2 minutes a preview of what we are talking so that we are in the same. So this is enhanced role for technology, financial management, for finance management, technology and financial for overall management post COVID. And we are considering COVID as post March. We are not talking that COVID is going to end somewhere and something like that. Right from the time when COVID has hit us, it is going to be there. Like Akram said, sometimes it may even be there for next few years, or maybe it's a permanent feature. We Life has to go on, and people like today's speakers are the one who are supposed to lead this particular management. Now, as India, it's one of my first slide generally, we have to understand that as a country, we are at 206 countries put together, but we need land and water. They are all available. We, as Indians, use only 0.45% of the land. So, balance land is there for people to use, people to expand, people to do so many other services. As a country, we are 1.4 billion people, and things are there, things are not there. Maybe the right water is not in the right place, the free land is not there in the right place. There is need for so many things, for which technology and the type of financial management are the two things which are going to bring it together. We are at a loss because this COVID has brought the economy to its knees. You know, something by which the numbers look big, but when you see the numbers from the global numbers and Indian numbers, the numbers are fairly insignificant. But psychologically and in real life, COVID has done a disastrous beginning. Now, it should also be made to end. So when such a pandemic thing comes, it is we who have to plan, and it is we who have to strategically take care of every sector. That's why, again, I'm not going to go into the slide by slide. We are talking of how various marketing, digital, how contactless payment has to come in picture. Because whether we like it or no, today right hand is afraid of touching the left hand. So we need to have technologies which has to come to support us. Artificial intelligence. Sometimes artificial intelligence was a debatable parameter because one was worried that artificial intelligence will make us lose the job. Yes, it will somewhere. But it has its own plus point by which it will generate new jobs, which is what we have to do. We cannot convert all the human beings to be away and the robots to come in picture. Then there'll be no funds for human beings to even use the robots. Financial functions facing what are the biggest challenges today, and they are very successfully coming out. So that is through digitization, through proper strategy, through proper management of the stakeholders, and the performance. So it has right from cash flow analysis to so many parameters of financial management. I'm just going to only you know run through the heading. So many of these things we have to see from the how much automation should be has to be seen. Our speakers would highlight many of these things. I will go directly to, yeah. In all this thing, smart city, blue economy, they are going to play a huge role. Smart city does not mean that 100 smart cities with government of India is talking. We are talking of smart city, the generic word, right from a village to the whole country. So in that, smart living, smart people, smart mobility, smart environment, smart economy, and smart governance. Okay, and there are many more topics. It's not limited to this, because under each topic there is so much of subtopic, which is what will make people happy. And why all this thing we are showing. Also, blue economy is another thing, which almost 7,500 kilometers of seashore. We should know that there is a huge economy lying there. This itself is more than $1 trillion economy, which has to be capitalized. So in all this thing, funds, people say funds are available. Fortunately, we had one of the biggest funding agencies, a funding chairman of a biggest funding company from Europe, who was the last week's speaker. And he said, whatever India wants, Europe is there to give. Only it should be put in a proper package way, which is acceptable to the global funding agencies, which I'm sure our persons will talk. And in all these things, secure governance comes in picture. Secure governance is a seamless, self-sustained economy, where through, very crudely speaking, through value and valuation, how funds can come in picture and how they can be used and how there can be 100% success of a project. That is what is a crux of the word secure governance, which is what we will do. And we have, as I said, two very, very eminent speakers. I will start with Mr. Karthik Radia. As I said, he's one of the youngest big achievers, and I'm sure he will. So I'm sure he will do full justice to enlighten us. How the youngster, he's also a very, very, very young person. He has got almost maybe 4 decades to go for his 4 decades of service we can expect. And by the time I'm sure India will be the number one country in the world. So, Karthik, please start your and also, I would like you to first talk about yourself at certain young age, how have you achieved whatever you achieved, and what are your plans now. And second, how do you bring comfort to the common man who is looking up at an experienced person like Kannan and a budding person like you? How do both of you look at the world for the comfort of the world's growth and Indian? Karthik.
Sure, sir. Thank you so much, sir. And I'm really happy, glad, and I would say very, very glad to be a part of this meeting and part of this elite group, particularly Dr. Shekhar sir, yourself, and Mr. Kannan. I think this is a very important initiative along with, India Policy Times, and very happy to be part of this, I would say. And coming to first about myself, sir, I would like to just quickly, just quickly introduce myself. So, as you've already mentioned, I'm part of Mazars India LLP. I'm leading Mazars India LLP. A large part of our focus is into technology transformation and bringing out innovative things, to the to for our clients. Particularly, we give a lot of focus on the areas that are related to national development. Our core focus has been to see how we contribute to national development of India. And we have done, things which are largely focusing around these areas. Particularly, currently, we are looking into educational space and, some of the other important areas which needs technology transformation at a very desperate level, I would say. Because, on one hand, we are losing so many student hours, where our students going to school, because that is the only way people, and it's not just India but across the world, people have been mainly used to learning in classroom environment, because not so much of technology intervention or technology transformation has happened in the teaching or education area, and there we are, doing a lot of work. But sir, apart from that, about myself, I'm basically from accounting background. I started as a chartered accountant. I was also a qualified company secretary, cost accountant, and then I was in CPA, CISA, and CIA from US. Largely spent my life in accounting and consulting firms. Today, a most important stakeholder for accounting firms like us, because we are no more just accounting firms. We are a lot more business consulting and technology firms. And a lot of time that we basically spend is with the technology people, particularly technology companies, because a lot of them these technology companies, they come up with solutions which may or may not be directly used by the business. And to be honest, technology, I would say the inventions in technology today, whether you call 5G, whether you call IoT, or whether you call artificial intelligence, machine learning, or a robotic process automation, I think they are at its peak of innovation. How do we apply that in business? I think that is where most of the technology companies and other most of the leaders and even companies like ours, I think we are finding our ways and means to see how do we actually apply this in real life. And that is where, sir, majority of the role is there for us to play. And Mazars India LLP, we are an advisory firm, business advisory firm, using a very good amount of focus on technology. In fact, 75% of the things that we do revolve around technology and uses technology. We started this firm about in 2019. Mazars already existed in India as auditing and taxation firm for about 2 decades. But about last year back, we are a center of excellence for areas like date, as in we call it as a digital analytics technology ERP, finance transformation and outsourcing, cyber security, forensics, corporate finance, and GRC, that is governance risks and compliance. And we have added a new word, which is resilience. So it is GRRC, governance, risk, resilience, and compliances. So that is what is a quick background about me, sir. The session I would like to cover, which is again a very meaningful, pertinent, and important session today, which is around how do we leverage technology, digital, and what are the key financial management strategies. These two things I would like to address, and I have put some five parts to my discussion today, starting with where are we on digitalization, what is the state of adoption of technology, how COVID has impacted us, what COVID means for us, and how businesses have adopted overall, and where is the state that we are in today. Second is about, I want to talk a little bit about business case for technology adaptation and technology transformation. Why and what is needed? Is it a big rocket science? Is it something really great, or so very different that so many old business timers, or older generations, they don't understand? Is it something which is really a lot of rocket science, or something very very innovative? And I would like to cover that as a part of that, to say that what is a business case for technology adaptation. The third thing I would like to cover is about technology integration. It's slightly advanced part. When you have so many different technologies, and remember that we are evolving. COVID brought us an important need for us to transform to a very different level of technology adaptation. But yet these each technologies that we're talking about, some of them are connected to hardware, some of them are connected to software, some of them are connected to even malware, some of them are connected to firmware, and some of them are connected to through the hardware into the devices like IoT. There is a need for integrating these technologies, because you can't allow these technologies to just keep evolving on and on unless you have a common uh, interaction point and an integration point between these technologies. So that is about integration of technologies. Then connected to our topic today, which is on financial management, I want to cover financial prudence, which is the most important part in financial management. COVID has taught us a very important lesson on financial prudence. We've gone back to learning our basic lessons on how do we conserve cash, how do we manage cash, how do we ensure liquidity, how do we ensure that we manage working capital. All of this is around cash and liquidity management. COVID has also taught us the age old principles of leverages. So, financial leverages, operational leverages, I want to talk about that. And these are age old principles and learnings coming from old days of financial management, and how they are relevant and applicable even today. Applying the power of conservatism in business. You may expect ambitiously the most optimistic economic outlook, but you have to prepare for something which is very, very pessimistic, or something which is very, very adverse. Are you really prepared for this adverse scenario? And do you have your financial systems taking care of, the operational and financial leverages and your cash in case you go adverse? To what level of adversity can you take? So that is on financial prudence, is what I would like to cover. And then the last part I would like to cover is that while we're adopting technology, and while we're talking about integration of technologies, we need a concept called digital trust. And when I say digital trust, that means that how much the systems can be trusted. Systems are saying and proclaiming that they are doing certain set of things. They proclaim that it is safe, it is secured, it is doing the required things. The data is kept secured. It is GDPR compliant. It is privacy compliant. A lot of proclamations are there about these systems. But then these systems also need a kind of validation on digital trust. And that concept is going to be very, very important, because you're exposing a lot of your data, exchanging a lot of your data in the digital and virtual world. You're so much dependent on the digital and virtual world that you need a kind of trust mechanisms for your digital systems, because your data is interplaying freely with the external world, with your business partners, with your customers, with your clients, with the external society and the communities. And that brings a concept, and we'll talk about the digital trust. So these are the five major things, sir, we want to talk about today. I will first start to talk about the state of digitalization. And there are some very beautiful lessons that COVID has taught. So some technology transformation projects which would have a timeline of, let's say, a few years, let's say 3 years or 4 years or 5 years to implement as a roadmap. I think some of these are just getting implemented on an immediate basis because it is coming back to the survival of most businesses. And when you talk about survivals, physical movements are restricted, and therefore people want to make sure that their goods and services are reaching to the end customers, and therefore it is the only way in which the goods and services can reach, apart from physical transmission, it can only reach through digital platforms. And therefore there is an imperative need that has been brought as a result of COVID, where people have crossed the boundaries to say, let us implement most of these things in rather 6 months, in rather 3 months, and let's just do it, quickly evaluate and do it. Entire enterprises focus has been to make sure that we implement some of the technology projects. Even people have gone out of the way to make over investments because it's about survival. Do we survive or do we not? And therefore people have taken it up. So that's an imperative. And coming to COVID, which has brought this essential imperative in front of us. I'd like to just cover as a part of that few things which are happening in that. The first thing that is happening is goals rationalization. So it has led and forced people to really see whether the goals that they are chasing, are they the right goals to chase? Meaning it is going back and making people to think about the goals, their basic purpose of existence, and the DNA in which they have to operate. Some important things there is, are we becoming too big to fail? While we are very, by becoming big, we may be becoming very impactful. But can we survive being so big? Do we need to be so big? And is there a fair competition that we are allowing the market to play with? So that is the first point. Second point on there on the goals rationalization is, from top line, the focus is shifting to value creation. You may keep chasing, businesses earlier thought that let's chase top line, don't worry about bottom line, don't worry about impacts, let's chase the top line. The top line brings with it its own set of financial leverages, and therefore people are really thinking in core terms that let the competition operate. We may not want to be market leaders, but let us go out and create the right set of value. So from top line to value creation, I already said, are we becoming too big to fail? And do we really want to be so big? Can we, today, for example, the enterprises which are big, very big, and you take any example, and I'm not just talking about companies like, let's say, the IT enabled services companies in India, which have gone with very good quarter one of the current year. But I'm talking about any company that you take which is very large in its size. There is a thinking process that is going on. Can we survive? Because there is a possibility of overnight going out of business. You take several examples today. Many companies have filed for bankruptcies, and therefore I think it is making people to sort of stop and think to see whether we are becoming too big to fail and do we need to make some changes. And then the digital and transformation goals, which are again very important for most businesses because people have adopted it. Second very important thing which people are now thinking, as an impact of COVID is, are we taking positions on because in any business there is a concept of value creation by which you gain customers and growth, and there is a bit amount of gambling on positions. You take a business view and you take a gamble. So the more we focus on value creation versus gambling, the more the businesses have a likelihood of surviving in the long run. So that's what most of the businesses are also rethinking about. And I've already spoken about, and I'm going to come to the concept of integration of technologies and digital trust system. The another thing that is coming along is the power of long-term thinking rather than short-term thinking. Most people want to achieve most of the things in 1 or 2 years. I mean, the concept that we earlier had on long-term thinking or a long-term business planning, that is virtually gone, completely gone, because all this while before COVID, we had been only thinking about, okay, what is 2 years plan? What is 3 years plan? If a business is not sustainable for 2 or 3 years, people did not think about it. People said, leave it. Let's focus on immediate priorities. So much of short-term thinking, and I think people have also come to live with the real importance of thinking long term. Also, I think what has come along is the power of natural living and quality of human life, because a lot of time has been offered to us, sitting from working from home, working remotely. That has offered us a bit of an advantage, I would say, to sort of live and spend quality time on natural living and quality of life. So I think a lot of impacts have a impact on how we are looking and thinking at things, sir. On business case for coming to my next point, which is on business case for technology and the state of adaptation of technologies. I would like to make a point here that, look, while we've been talking about things like artificial intelligence, machine learning, robotics, none of this is really new. None of these things are really rocket science, or none of these things are such that which are major breakthrough inventions. Like, we had a telephone call discovery of a telephone, or a discovery of electricity. I don't think it is that kind of a discovery. The basic thing that is happening is people are now realizing that internet is there with us. We had 4G for all this while. Making use of 4G, most businesses which have been able to adapt to using 4G, let's say talk about e-commerce players like, like, let's say Indian is Flipkart, Walmart, which is now part of Walmart. But let's say Walmart, Flipkart, Walmart, let's say Alibaba, let's say Amazon. What have they done? All that they've done is they've used technology to solve a very basic business problem of availability of goods through electronic channels. It is not something which is, let's say, internet was already there, and they've invented e-commerce, which is around using the concept of internet and 4G. It is taking the goods and services into the market. So some businesses which have been able to use technology and create business models around technology. So let's say Alibaba, or let's say Flipkart, or let's say Amazon. All that they've done is the traditional retail organization, which was focusing on physical shops and physical establishments. It has taken it into electronic, in a virtual environment, and then it said, okay, let me distribute as and when the need comes. So those businesses which have been able to adopt some of these technologies which are available now, these are not something which are like breakthrough technologies that changes the world and the outlook, like electricity, for example. But these are basic internet driven technologies, those which have been able to use it, whether you call artificial intelligence, whether you call internet of things, whether you call robotic process automation. Those businesses have been able to take it take their businesses to the very next level, and able to become very successful. And those businesses which have not used this, they are now forced to use this, to say that, okay, are your processes digitalized? Because people can't go to office, people can't use papers, because they can't move papers. There is so much of risk and security issue now, health issues, moving papers around. So can you move things electronically? So they are now forced to adopt this. And you talk about core industries, whether you talk about, let's say, an oil and gas, petrol manufacturing, cement manufacturing, infrastructure companies. Most of these now are forced to adopt technologies, at least at the corporate office level, to make sure that they are connected to the customers and trying to bring back the things to normalcy. Most of the other companies like financial services, talk about any financial services companies, they were already on taking and reviewing areas like fintech, blockchain, like some of the other ecosystems. Let's say banks, for example. Banks were already using internet banking, but now I think a very different kind of mechanism has been thrown up in front of them, that how banks can use larger ecosystem of payment gateways, of so many other systems, like let's say land records, or other blockchain records, land registry, blockchain records. And some of these things would be even useful for companies like banks. Apart from internet banking, I think it would mean a lot of adaptation to fintech and blockchain. And again, that, I would say, again, it's not very breakthrough or something which is very adventurous and has changed. But yes, definitely adopting this will change the whole course. whole course of operation, because that changes of that changes the basic way of doing business, which is now you can do business anytime, anywhere, from any part of the world. And therefore the real mobility is completely brought to a very different kind of a transformation. So, this is about the companies which had already adopted or which had not adopted, and how and what they're looking at in terms of adopting technologies and in terms of changing the things. There are two essential things there. You have to operate in the physical world and the real world. So, you have to move the goods in the physical world and the real world. And then you have digital platforms, which is called the virtual world. There may not be need of mobility when it comes to digital world, and a lot of interactions, corporate office interactions, etc., they have become a lot more digitalized. And therefore using these digital interactions, you have to make sure that your physical world is operating without a lot of physical movements. You are able to move goods and services into the physical world and making sure that it is reaching the end customer. And that also brings in a concept of virtual reality and augmented reality, because many times this digital existence is not a real physical existence. People want to invest in experience. People want to invest. So for example, let's say you talk about media and entertainment companies. um, while they existed in the physical world, they made you to go to theaters and see movies, for example. They made sure that they traveled to different locations in the world and did the shooting, brought it to the market. And again, there was a lot of physical environment while it was already digitalized. But there is a concept of virtual and augmented reality that now some of these companies are making use of, to make sure that the customers and the clients, they basically getting into a concept of virtuality, they can simulate and have a much better experience of a physical world. So sitting at home, how can you enjoy an experience of a theater? Sitting at home, how can you experience, how can you can experience an experience of a fine dine restaurant, that you would have gone to for dining, a fine dining restaurant experience sitting at home. And I think a lot of this is coming to using the virtual reality and augmented reality and combining the physical world and the digital and virtual world. How do we optimize and how do we create the best in class experience? And that is what is coming to as a result of this COVID business imperative. Um, I now come to another important element, which is on financial management. Financial management and financial prudence. And this is again a very important learning that we have had. Businesses realized that if you don't have cash,
Before beginning, Karthik, could we have our initial from Kandan, and then we'll take this financial portion?
sure,
Yeah, yeah.
sure, sir.
What we'll do, we'll have Mr. Kannan, and then be sure to give the whole thing. There's no problem of time.
Sure.
Mr. Kannan, as much as an youngster's vision is so good, uh, now here is a person who is in the field for 35 years. He has been in Tata consultancy, he has been in banks, he has been in various establishments, and he has seen it go through. And at each time, there has been problems. And at each technology, we always keep saying this: the end has come in technology, and something new comes. So I'm sure he would like to have his, thinking and his thing. Same thing. Probably first 2 minutes on your personal growth and on technology versus financial thing, and then we'll come back to Karthik, Mr. Kannan.
Sir, you
You
are
unmute. You're unmute.
Yeah.
Yeah.
Good afternoon, Mr. Shekhar, Mr. Akram. I'm very, very happy to be part of this program today. And I would like to really congratulate you. Ever since April, I think both of you have done more than 35 programs under this platform, bringing people, experts from across the world. So you are doing a wonderful job. So my congratulations to you. As far as I have about 35 years experience. Initial 10 years, I was a management consultant doing assignments on strategy, on financial planning and funding. And I have carried out assignments for World Bank, Asian Development Bank, and other institutions. And the last 25, last 26, 27 years, I worked in industries like airlines, like Thai Airways and like ICC Bank, and of course IT company like ICC Infotech, and with Hinduja Group for in between I was not there almost 22 years. So that is my experience, and of course our group is a well-known group in the world with about $50 billion of revenues all over the world, and we are in about 10 sectors. We have companies listed in US as well as we have operations in 40 countries in the world. We have two famous brands in the world called Gulf Oil, which is there in 120 countries, and we have a company called Quaker Chemical, which is present in 160 countries in the world. That's a listed company, yes. So that's a background. So coming to this finance and technology, Mr. Karthik clearly brought out how technology is helping various segments of the society, even during this crisis. One good thing about technology is that what we have seen, if you see the crisis, what has happened, it all started with the health crisis. Then it moved into financial crisis where companies were finding it difficult to work. They had to close down. Then it turned into an economic crisis where the governments were affected. And finally, it turned out to be a social crisis because most of us are confined to the home. Most of us are under pressure because not going out. And at the same time, also, there are reports by ILO saying that almost, I think 116, a lot of people lost jobs. When the CMA brought out a report 2 days ago, where about 25% of people in organized sector lost jobs. So this is the impact of impact of this pandemic. But one good thing is that in the last 4 years, India has really moved ahead well in technology adoption. When I say technology, it's digital technology. That is the one which is connecting everyone. So 20 years ago, we used to say that there will be a convergence of technology, media, and telecom. So today, in fact, in the last 5, 6 years, ever since the smartphones and all have come, we really see a convergence of technology, media, telecom, and our lives are really intertwined with the technology. So since we adopted this technology and this mobile technology was adopted in a big way in the last 4 years, when this pandemic came in India, it has been much easier for government to manage. It was much easier for companies to manage, and it was much easier for people to manage. So today we are all working from home. Children are studying from home. So all that is happening thanks to technology adoption. Then coming to finance part of it, I would like to say that this pandemic has really affected every segment of the society. I would like to divide them into four segments. One is the government. If you look at the government segment, in India, we have both central and state government. So what has happened because of the decline in GDP, as well as after the introduction of GST, we saw there was a big setback to tax collections. So after the GST was introduced, we saw many of the taxes being collected by state governments go away, then central government. So central government expected about 1,40,000 crore of taxes to be collected every month from GST. But at the best, it crossed only 1 lakh crores. Now it is hovering around 75,000 crores. So there was a big gap of about 60,000 crores. And plus this pandemic, so one side, what we found was that the revenue was falling. On the other side, because of this pandemic, the government has to come up with a lot of new measures. They have to come up with a lot of incentives, which has increased the expenditure of the government. So in fact, as of now, I think the budget for the government is that central government, they are planning to borrow 12 lakh crores and state governments are planning to borrow 9 lakh crores. This will be the highest ever borrowing by Indian government. But this is the estimate. But reality is that they are likely to borrow more than 25 lakh crores this year. So in 1 year, we'll see the debt of India rising very sharply. So there is a challenge before the government. On the one side, they are finding that they are not able to generate revenues. On the other side, they are finding it very difficult to meet the expenses. Of course, government has come up with a lot of a lot of programs, mainly stimulus programs. But people are saying that they are finding that it is still not stimulating, uh, considering that India is a services-based economy. Most of the services-based businesses are affected very badly. We are finding it very, very difficult. So, what are the what are the sources the government can look at in terms of tiding over the crisis? So, I will take government, corporates, and banks, and finally, I will take individuals. So, what is that each one has to do in this situation so that financial management can be better? So, deficit will be high, both the central and states. And one thing, when central government introduced GST, why all the 30 states they agreed that yes, we will adopt the GST was the central government went and assured every state government that since you are all leaving out octroi and other sales tax and all those issues, so what we will do every year, irrespective of what is your contribution, collection contribution, we will make sure that every state gets 14% increase in tax from GST every year. So if there is a shortfall, central government will make it. So now central government itself is not collecting, so they are finding it difficult to pay. So shortfall in GST. So what could be done? So there are other sources. One of the things which in India, which is a hidden jewels, if you ask me, these are all public sector companies. So most of the public sector companies in India, about two-thirds of them are not doing well. They are sick. Not to worry. All these people have got assets in the metropolitan areas. So if you look at the value of these assets, I'll give you some two simple examples. You take BSNL. BSNL, it is a very hyper-competitive business, and it is not doing well. It has lost its rank and all that. But look at the fixed assets they have all over India. If you gather all the fixed assets of BSNL, it will alone amount to 20 lakh crores, not less. Or you take a company like MTNL. MTNL is present in only two cities, that is Mumbai and Delhi. So if you look at the assets of MTNL, that alone will be 50,000 crores, not less, maybe 1 lakh crores. So like that, if you take each public sector enterprise, they have some hidden asset in the form of large real estate. So if you look at the large real estate owners in India, they are the defense forces, they are the railways, they are the public sector. So that is one thing which government can look at, kind of using this land as a equity for doing a public-private partnership projects. So they can give this as an equity. That's one way of government kickstarting. Where many of the companies, they want to grow. One of the issues today is that Dr. Sir said just now. Last time they said European funds are waiting, but all these people, when they want to come, they want land. So all these enterprises, they have huge amount of land, which can be used by these companies, by the government, as a equity of the government to give the land and do the business. That's one. And of course, dividends from PSUs, as you're all aware, only 10 or 12 PSUs, they do very well. And they give very good dividends like Coal India, NMDC, and all this. And of course, recently, after oil prices are being raised every day, so IOC, BPCL and all, they are able to make profits. So they are getting dividends, and of course RBI also, it was making good profits. So it was also doing its bit, dividends. So that is one area. If they are able to improve the performance, if you go to look at any public sector company, they are all highly qualified, competent people, and they get the best training in the industry, which even private sector they don't give. So that is the advantage of public sector. They are highly competent individuals. So if the right policies are there, if the full freedom is given to them, a public sector company will do as good as any private sector company. In fact, in public sector, there are 3 or 4 companies which do better than private sector. NTPC for that matter. They are the best operating performance for plants in India. So like that, there are 5, 6 companies in India which have a better performance matrices compared to private sector companies. Then sale of PSU shares and all they are doing now. But if you ask me at present, most of the public sector companies are very much undervalued. So their shares, they don't really reflect the value of the shares. So best thing which government should do is, especially for listed public sector undertakings, they have to develop a investor relations strategy like in a private sector company and create a value for the share. Then they should go and disinvest. That's what they should do. Then, of course, this is one of the things which I was talking about for a long time. The government should lease ports, roads, and all that. They started doing it in the last 2, 3 years. So that is going to give them revenue. In fact, whenever you hear the Minister for Roads talks about, he says that whenever he wants money for the project, he is not finding it difficult to get money. So there are innovative ways by which, especially port and road development, money can be raised. The money which can be raised by leasing, that can be used for new infrastructure. Then I told you about PPP model for economic development. Railways is one of the large owners. Of course, they have drawn up a big plan. They want to invest, I think, the next 5 years, 8 lakh crores. And maybe going forward, they have plans to invest 50 lakh crores. So that is PPP model for economic development. Then, as I said, use land as equity. And third, the other one is that's the REIT and InvIT structure. It was mainly being used by private sector earlier. Now I think government has started looking at the REIT and InvIT structure. That will get funding for them. And of course, day before yesterday, our Honorable Finance Minister said that Asian Development Bank, India has got the capacity to borrow $500 billion. So Asian Development Bank can look at lending 500 billion. So we can avail. We are the largest borrower of World Bank. We are the largest borrower from IFC. We are the largest borrower from Asian Development Bank. We are the largest borrower from Asian Infrastructure Investment Bank. So India, so everybody is very hopeful of India, bullish of India. In fact, a lot of investments have come from Japan and Canada. And as Sir said, that Europe is also willing to come and invest. Then the last option, we are living in an unprecedented times, unprecedented pandemic. So this calls for unprecedented kind of measures. So our government is really carefully evaluating whether they should go for money printing in a big way. If you ask me, the plan for borrowing of 21 lakh crores which they put now, that is not enough. My estimate is that the government might require about 30 lakh crores. So certainly a part of the money has to come from printing money. Printing money means not free. Of course, they'll issue bonds. One good thing is that in the last 5, 6 months, the interest rates of bonds have come down. All of you know that banks have reduced the interest rates. So government will be able to borrow it at a much cheaper rate from the market. In fact, when the banks are borrowing from RBI at a lower rate, they are putting it back. Long term, they are borrowing and they are putting a short term money in the RBI only back. So they are not lending. So this is what these are sources. So printing money, it's called modern monetary theory. They call it MMT2. So I have written about this in the newspaper also. Somehow I think government will certainly go towards it. But if you ask me, they should do it faster than what they are thinking of doing. Then coming to corporates, as you're all aware, capacity utilization is very low for many industries. If you look at airlines, capacity utilization is 20%. Many of the manufacturing industries, it's only 20-30%. So, uh, and plus, there is also a question of supply chain difficulties. All that is putting a lot of pressure on corporates. So they are really not in a position to manage themselves. So that is where, of course, government has brought a lot of measures for SMEs. But if you go to some of the developed countries like US, Germany, and Japan, they also brought schemes for large companies. how to help large companies. So those type of schemes should be brought. So corporates, what they need to do, considering that they have 20-30% capacity utilization only when corporates have capacity utilization of more than 85%, they should look at capacity expansion. So whatever capacity expansion plans they have now, they should postpone. That's one. Second is that they need to reduce fixed costs. So what happens is that in a boom period, companies accumulate assets, they borrow a lot of money, so they start paying a lot of interest. That creates a big fixed cost in the system. So they have to reduce fixed cost, and also they have to explore how to convert most of the fixed costs into variable costs. So once you convert fixed cost into variable cost, that is going to increase the flexibility of the corporate, and it will make the corporate survive in a kind of downturn. Then, of course, many corporates, as I said, they accumulate a lot of assets. So they have to look at assets which are not really adding any value, like Mr. Karthik said. So those assets should be sold off. Or if you don't want to sell, you can always look for now. There's a lot of after that Atma Nirbhar campaign and program by government. There's a lot of interest by a lot of foreign companies in India. So what companies can do is that identify the potential partners and bring them as an investor into the company and start growing the business. So they have to reduce the debt, reduce interest. I'll go a little faster. The time available is limited. Then they have to conserve cash, as Mr. Karthik said, and avail the government schemes. Government has brought a lot of schemes for helping the corporates. So corporates have to study all these schemes and see which scheme they can avail. So that they have to do. Then reduce hyper competition. In India, at least 20 industries, they have hyper competition, right from banking to insurance to automobile, you name telecom. Everywhere people competing on price. So when already the industry is doing very badly, so then what you have to do? Of course, competition commission should not come and say that you all agreed on some price, minimum price, but there should be a minimum price by which every corporate survive. So that is very important. So we have to kind of reduce the hyper competition by taking action which is beneficial for everyone in the industry. Then, of course, raise funds from abroad. This is what we have seen. Of course, we know the famous company Reliance Industries. It was able to bring a lot of money, which has increased really the investor confidence in India. Coming to banks, they have high level of NPAs, and right now there is a low credit demand. Reason is that companies they are trying to repay the loan. Second is that they are operating at a very low capacity, so they don't want to take any further funds. So there is a low credit demand, and corporates are reducing debt. There's a higher credit cost for banks now. Usually, credit cost is 1 to 1.5% now. According to some latest report, they say the credit cost for banks can be 2.5 to 3.5%. So one good thing is that cost of borrowing has come down for the banks, and they are investing money for short term in RBI and borrowing long term from RBI. So it's only recycled within RBI, not coming to the system. Then then they require capital. Considering the NPAs we have, all the banks require capital. If you ask me, if you go to US, they had when the last crisis, they had a fund called TARP, Troubled Asset Relief Program. So under the fund, they went and even invested in equities of private entities. So the Indian government should look at even investing not only in public sector banks, they should even consider investing in private banks. If they give the proposal, certainly private banks will consider. Every bank requires a capital today. You must have seen the last 4 months, every bank raising money. So they have to raise capital. Coming to individuals, uh, the surveys show that the heavy job losses. One good thing is that an average Indian, I'm not talking about people who are from a poor category, an average Indian generally saves about 30%. So that is the savings we have. And you know, India, we have the largest amount of gold available in the form of various forms of gold. and many people have gold also as an investment. So the reduced one of the issues is, apart from loss of jobs, there is also loss of income from other sources like fixed deposit. So they are really affected. So individuals have to be really very, they are careful today. So they are preserving the cash. They have to preserve the cash, and uh, and of course on the other side we also see inflation going up. It will not go up so substantially. It's going up. So they have to be very careful managing the cash. So one of the things, if you have to manage funds well, the most important thing is that you have to achieve a very high economic growth. So the modern monetary theory adoption, why our government is worried is that our India rating will go down. We should not worry about that. If you don't do that, it will be even worse. So we have to focus on economic growth, and the focus of government should be to revive the demand for every industry and manage the inflation between 3 to 5%, and of course they can mobilize funds from across the world. I told you Canada, Japan, and many other countries are invested. So this is what I want to say, and of course, role of technology will remain very important. I was attending a webinar by NPCA last week, organized by IIM Ahmedabad. The kind of features they have in NPCI, the products, they're really fantastic. But only thing, when you adopt all this, the revenue model of banking system will be affected. So while adopting technology, also we have to make sure that we don't kill the industries. That's all what I want to say. Thank you.
Yeah, yeah. Thank you. But you'll have one more small round. Now coming to Karthik's focus on financial management. I'm sure after an enlightening talk about technology, this will be equally enlightening. Karthik.
So, sir, I'll just, in fact, just last 2 points left, and I'll quickly wrap up my part.
Don't. We'll extend it. Please do not worry. I think it
Okay.
was going very well, and that's why I told Mr. Kandan also. He will also have one more round. We will extend it because it has to go well. We have to convey right meaning. Please do not worry.
So I think Mr. Kannan has very well covered the financial management part, and I think there's not much that I have to add there, but only just couple of things I wanted to share that particularly startup companies, because India was very optimistic about startups. People kept on focusing about bottom lines and let's bring the growth and not worry about the cash flows. I think an important learning there is that cash flows, every business to survive is focusing on week to week, month to month, week to week cash flows, and there is a plan drawn up by most businesses as to see from 3 months to 6 months to 12 months, how are we going to be cash sufficient? Does that bring in a need for us to borrow money, do private placements? Does that need is there a need for us to announce more cash discounts? All different kinds of possibilities have been worked out, and the cash monitoring has been shifted, which was earlier to a much more middle management, or maybe rather to a finance department. It has been shifted to even beyond finance department and at very senior levels. In fact, it is not really a surprise that even CEOs of the companies are looking at finance management very closely. And as Mr. Kannan also mentioned, that the fixed cost, essentially about the fixed costs, there are two types of fixed costs. One is operational fixed cost, and one is finance cost. When you borrow, you also incur a fixed finance cost. Both these costs have different kinds of leverages. So operational fixed cost has an operational leverage, and the borrowing cost, that is the interest and debt service cost, has an impact on the finance fixed costs, or financial leverage. So organizations are looking at how do we cut down our fixed cost, how do we variabilize the costs, so that we don't have to incur a lot of fixed costs and go for committed, because committing fixed cost means you're going and taking positions that I take a view on business. The business is going to be looking like so and so. Nobody knows how the uncertain environment is going to span out. So therefore, a right strategy there is to see how much of these costs, including your rental costs and some of the other costs, how can we make it to pay per use cost? How can we variabilize the cost? I think that part was very well covered by Mr. Kannan, and I just thought I will add, to this part that how much attention is going to finance, because in any case you need to pay your employees, you need to pay your fixed costs and other cost commitments. How do we at least make sure that these costs are met on a month-to-month basis? And that's where the attention has shifted to senior level, also beyond finance department, to manage cash flows on a weekly, monthly, daily basis. So that is on financial leverage. I have one more important point to cover, which is digital trust system, and then I will just conclude my session after that by seeing that what are the opportunities for us as India as a country, and I would say as Mr. Kannan already mentioned that we have public jewels. I mean jewels in the form of public sector companies, and that's a very beautiful point. And I think some of the statistics that Mr. Kannan has mentioned about the printing of currencies and what is going to be the net debt, and the deficit financing, what is going to be the net fiscal debt, and how much government will have to borrow. I think these are very useful, very useful statistics. But in that context, also one very important point that we have is today as a country, we are still a very young country. The age workforce is very the way because we are very young and agile, so we are able to quickly shift to the digital way of working. We are able to show this path of digital way of working by way of some of the technology solutions also globally, because globally the workforce, is slightly older than what we have in India, and therefore the mindsets globally are not so very agile as much as we have in India. So that's a very important point I want to cover. Coming to the digital trust systems, sir, which I'd like to just quickly cover. It's again a concept which is very new. In the light of the concepts like all the digital technologies that we're talking about, whether artificial intelligence, IoT, RPA, blockchain, commerce automation. Commerce automation, I just like want to spend maybe 10-15 seconds. Commerce automation is right now all the transactions within the business you have digitized. But from one business to the other business, how do we automate the commerce transactions? So like purchase orders, invoices, contracts, and that's where the two companies which have different systems or different legacies, how do they communicate? And there are very cost expensive propositions there. And I think commerce automation is again a very important thing which businesses are trying to automate, because it's not just about sending an email with a purchase order or a physical purchase order, but there needs to be secured way of doing this commerce automation. So 3D printing even, and drones that we have, drones which can do a lot of manual things where the human beings cannot do. Now with this, it calls for an imperative for digital trust, and there are some principles of digital trust. There are some 12 principles of digital trust that I would highlight, and any solution on digital trust should address most of these principles, starting from credibility. So any digital trust system should give an assurance on credibility, that it is credible and reliable. Then comes transparency, that it is transparent in terms of what data it takes, how it processes, how it uses, and how does it produce the output. Third is security and privacy. So the system should be secured and private, and that's what the digital trust mechanism should assure on the principle of security and privacy. Reliability, point number four, but that is already covered to some extent in point number one, which is credibility. But reliability comes from how much the system can be reliable and can be relied upon. Fifth point is integrity, that there are no errors and the system produces accurate, takes accurate data, processes accurate data, and produces accurate results. So that is integrity. Resilience and availability. And resilience means that system is resilient to some of the mishappenings, and system will able to come back and quickly recover. Something like COVID, for example, system will be able to come back and quickly show the resilience. So that is resilience, and it has to do with availability. So resilience and availability. Data and asset stewardship. So any data that is being processed by the system or owned by the system is being handled as a custodian, is being handled as a trustee, is being handled as a steward. And so is the asset. Any asset that is handled by the system or interfaced by a system is being handled by the system as a steward. So that is data and asset stewardship. Regulatory compliance. That means the system is regulatory compliant. Ninth is fit for purpose, to say that system is fit for purpose. 10th is right analytics, to say that system uses the right kind of analytics. 11th is right outcomes and decisions. So for those systems which are able to make decisions themselves, it is to say that the system produces right outcomes and right decisions. And the last point, 12th number, is accountability. System holds itself accountable, system holds itself responsible for anything. So there are things like penalties, there are things like some of the other consequences if the system does not deliver. System has to hold itself accountable. So these are the principles of digital trust, which are very important. And I now just come to last very important part. As a country, what is the opportunity in front of us? So there are some very good enablers that we have, starting with a very young force, a technology savvy workforce. And I want people to remember about the dot-com revolution, the IT revolution, or the www revolution that we took charge of. And we did a lot of things. We have big companies in the form of Infosys, TCS, Wipro, and so many other different companies which are now existing, which are as a result of the dot-com revolution that we took advantage of. So there is technology savvy workforce that we have. Adaptation is quite fast. Corporate offices have shifted. There is an educated workforce, and therefore we have a very good advantage there. Almost every corporate office doesn't need to be physical, and they have already adapted to this. So adaptation is quite fast. And then the internet communication and digital adaptation also, I believe, is quite rapid, because today you see most rural parts of India, they are using internet, they are using WhatsApp, they are using smartphone. So to a lot of extent, we already have very good enablers. But there are some things that we need to take care of and be mindful about. And I would like to even take up those things quickly. Social distancing is definitely here to stay. It's not going to go away. Mega cities as a concept, and sir would very much, Shekhar sir would very much relate to this, because all the mega smart cities will have to live in a different way. We are not prepared for a catastrophe like a bio war. We have seen this, how a small kind of a small kind of a bio war, or you don't need a terrorist war anymore to happen. A small release of bio weapons, or bioorganisms, can bring cities to halt. And therefore existence of mega cities and our preparedness for that. The loss of productive hours that we are using at various levels. There is, as sir mentioned, even Kanan sir mentioned, 25% of our people are unemployed. The labor force which is ready to be utilized is unemployed. And therefore there is a need for utilizing the productive hours, and even the schooling hours of the students. Somehow the education systems is not able to fully take that up. Upgrading of the unskilled workers with some of the modern technologies is again something that we need to take care of. And we need to really prepare for quantum internet, the 5G, which is going to play a very important role. And lastly, our mindsets. I think the cultural mindsets and the way of working mindset need to fundamentally change to adapt to these newer ways of living. I think this is all that I had to cover as a part of my session. Happy to take up questions. Over to you, Sekhar sir and Kanan sir.
Thank you, thank you, thank you. Very nice way to conclude. Now, I would like Mr. Kannan also to have the say on how quickly, not in terms of COVID going, we will research back, we reincarnate. The whole thing is national reincarnation. So many ideas has been put. We are all attending so many conferences, so many webinars, so many people talk to us, and there has to be. I'm not talking of COVID going at all. I'm seeing COVID as a way of life. COVID is one more small germ which has hit us. Maybe when we are there, somebody said TB used to be bad. Somebody said cancer is bad. Now everything is taken for granted. We just say X, Y, Z. So mindset-wise, things have to be different. So as a person who is a veteran in the field, who is already in the field for last in more than 3.5 decades and more. How would you like to conclude today's talk? Just for 2 minutes, you can give your preview.
Yeah. Like you said, COVID, people are saying that it will be there for some time, assuming that it will be there. What is the likely impact? The likely impact is that you will find only 50% of people in offices. What we have today, 50%. Already, I think plants are operating with 20-30%. And what it is going to do, it is going to bring down the demand for a lot of the discretionary products. We know that essential product demand is still holding good. Yeah, food, agricultural produce, all that is holding good. But what will happen if people are not so able to socialize? Yeah, there is a whole set of products which are mainly focused on the social aspects of it. You talk about media also. Media also, people are finding it difficult to survive. Media is one sector which has been affected in a big way. So assuming that it will be there for another year, we will find more job losses. That is for sure. We will find a higher level of tech adoption. It is already there. The joke which is going around is that what CEO and CTO they want to digitize for last 5 years, which they could not achieve. They have done that in the last 6 months. So that is a joke about this COVID. It accelerated the digital adoption across the companies. So he was talking about privacy and all that. Companies used to do everything within inside systems. Now people are talking about moving to cloud. Even important data, core data can also be kept in a private cloud. So like that, the entire way of living, entire way of doing business, all that will undergo a change. So there will be a business model change. There will be a lifestyle change. So all that I expect, if it is going to continue for more than 6 months. Assuming that we are able to manage it within 3 months, what I can see in the last 1 month, of course in Mumbai, ever since they said you can move around, if you go to the road, even though our offices don't work, we find as many number of people on the road. We are all social animal. As human beings, we are all social animal. We can't be confined to one single room. So people are willing to take the risk and move around. So that is also happening. So these are the trends, and it is too early to say how it will be after a year. All our predictions, modeling, and all, they don't work at present. Thank you.
Thank you for an excellent conclusion. So, for concluding our today's session, the idea is combining these three words: technology, financial, and management. How, what was the reason for combining these three words? Because finance is the one which makes us run. Otherwise, we could have been a very happy country with 300 million people, the way we were maybe when we got independence. We have put on people. We have put on 850 more, 850 million more. So our job is to see that we feed them, we give them the way, but we cannot feed them by just giving freebies. That is where the financial management comes. How the money which is there with me today morning goes to you by today afternoon, goes to him by today evening, goes to somebody else, and how quickly it turns around. It is not that when we say we have to keep printing money from the fiscal point of view, yes, we may have to print, but not from feeding point of view. We can't just have freebies. But where technology comes in, technology is the one which makes people do. Today, when a TV comes, it's not the TV alone which is coming. Because of TV, there's no so much a back end. It gives employment to so many people in the media, so many people in advertisement, so many people in so many sectors. So each sector has a cross-breeding this thing. And all are controlled by finance. If money is not there, if Lakshmi is not there, none of us are there. So the money management, the money manipulation, so to say, the money strategically using it is all combined, which is what has been highlighted by our esteemed speakers. And technology should not be there to just remove employment. Many people come and say, "Oh, I want technology and I want to remove people, remove people, remove people." That mindset has to go. Technology has to bring in people. Technology has to optimize, and like Karthik rightly used the word, where we cannot do something, use artificial intelligence. Don't use robots and drones to just remove people from delivery. Today, even at least delivery, we have got more than million people working. There are people, oh, drones have come, so very good. Now, no delivery man. Right? You're going to remove somebody, and you're going to pay double the amount. You're going to pay in equivalent amount is much more than the salary which is being paid. And even if the salary is a little more, I think we should still pay. But drones should be there. At the same time, drones, artificial intelligence, IoT has to be there. Of course, I myself being a technology man, I can never say against it. But utility of it and the mindset to think that these should remove people from job should not be there, because we need to, because people like us have to catalyze development, has to catalyze new way of thinking, new strategic way of thinking, and new way in which the country will reincarnate. With that, thank you so much for your excellent talks, and
Thank you,
we
sir.
hope to see more of all of us. And I conclude today's talk. Thank you.